Well, it is the first trading day of a new month, which means we need to zoom out and have a look at how the monthly candle closed for August and build a plan for what to expect for September. Now, historically, September is a fairly bearish month for Bitcoin. A lot of people will expect further downside. What we know on this channel is that usually what most people expect, the opposite will happen. So we're going to keep our eyes peeled for a rebound, try and identify some key areas that would be good long-term areas to buy. And if we don't expect them to come in September, then we don't expect them to come in September. But that's what we're going to go through today. We're starting from the monthly time frame and working our way down. So if you're new here, welcome. If you are returning, welcome back. I am Annie and this is Trade Travel Chill. Be sure to hit that like button nice and early and hit subscribe if you're not already subscribed. Now let's get into it. So having a look at the monthly chart for Bitcoin, what we can see is that we are still in a pullback phase after this initial move to the upside, building a little bit of a flag formation. The August candle actually closed as a hammer. There's quite a large wick to the downside that tested the 20 EMA, and we ended up closing the month back above the 10 EMA. So this is not actually all that terrible when we look at it zoomed out this far. The only vector that we have in this move up initially is this green one here, and the 50% area of that is at about $53,050. We wicked into that in July. We wicked below it but closed back above it in August. So this is really our initial key areas, the $53,000 kind of region. If we do break below that, we can come for the bottom of this vector and still actually remain bullish. If we were to do that, that would be very close to the yearly open, which is at around about $42,300. And when you draw a simple fib on that, you can see that these levels are around the 38 fib and around the 50 fib. So even if we did pull back into any of these levels over time, we'll still be above the 50 EMA. We're still at a retest kind of area for fib levels. We would just be recovering this fast move to the upside. All would actually still be well and good, even if Bitcoin came to test the yearly open. Now, I know most people don't want to hear that that's a possibility, because whilst that's not really a scary shakeout for Bitcoin, if you understand the Bitcoin cycle, it will likely absolutely destroy your odds. So I really do think that at this point in the cycle, Bitcoin should be everybody's focus. And I also really do think that this cycle is the cycle that everyone, whether you want the 100x multiples or whatever you want, you need to be Bitcoin heavy in your portfolios. I'm actually going to do a separate video on why I think that is, because I don't think this cycle is similar to any of the past cycles when it comes to altcoins, but that is a rant for another day. When we go down to the weekly time frame for Bitcoin, a few weeks ago I talked about this formation that was happening here. At the time, this candle hadn't closed, and I put out a warning. There was about 3 days to go. So I put out a warning to assess how this candle closed, because that will be the hint of further downside to come, as this would form a star formation if this side were to close as a bearish engulfing. And we actually ended up getting that close with an increased level of volume. And since then, we have not been able to make it back to that area. Now, when I look at the weekly time frame and I zoom out on this, what I can see that is hopeful is that we really, at this point, we've only tested the halfway mark with this 1 wick right here. So I still feel the same, that this is a move up, and this boring, very long period of accumulation is literally just the retest of that. And how much longer it goes on for is how much longer it goes on for. Like, nobody really can predict that. But when you zoom out on Bitcoin and you're looking at it on higher time frames, we really are just in a retest period after a move to the upside. And it's just a matter of time and patience, really. When we move on to the daily time frame, I actually spoke about these flag formations that broke down on my last video, so I won't go through them again, but I'm just going to show you the result, because on that video we had this big move here to the downside, and what I said to look out for was a retest of about the halfway mark before we ended up breaking that flag, and that's what's happened. So this was the retest here. It was a 1-day pump. You could only have caught that move as a day trade, and now we have broken down and we've broken through that flag. So the next thing to happen would probably be a retest of the flag. And if we can't close back above it, we would expect that we're probably going to come down further. Now, just remember that whilst a retest is being made, as a day trader, that would be a long position. So there could potentially be bullish setups on the smaller time frames but they're going to go nowhere if this retest of this flag turns out to be successful and the candles start to look bearish around about the 200 EMA, then you would close those day trade longs and you would get ready for a bigger short back down. These liquidation levels are current and relevant now. So the highest level of liquidity that we have below price currently is at 52,700 to about 57,100. So anywhere in that range, if the price were to give us yet another lower high and start to move down after that, anywhere in that range would become the target. Ideally, when I look at price action alone, I like to target the candle closes of the last low. So that would be here, which is at around 53,980. That would be my initial target. And then I would reassess from there to decide if it's worth holding on to, and I think we're going to come down lower. We do still have this other area down here that we need to be aware of, but it's not a guarantee that we're going there, and that is at about 46,400 to 49,255. The reason why I say you should still keep this area in mind is because when we zoom out, we've got vector candles here that have not yet been recovered, and they actually started that breakout and really what essentially ended up becoming this big accumulation zone. But in addition to that, when we have a look at trading light and we look at the limit orders, we still have this large cluster of limit orders here, and they're between 47 to 47.5, and they've been there for a really long time. If you understand heat maps, then you understand that this can be a trap, that they're sitting there for so long, where they keep those orders there to get retail traders who understand heat maps, at an amateur level, to believe that price is going there because the orders are there for so long, and therefore they wait for that. So they keep shorting down into hopefully taking profits around here, but that price that won't end up going there, it actually turns around before that and it wipes out and liquidates all those shorts. So you have to be very cautious of this, and you have to know how to read heat maps really, really well. So that's why I say let's be aware that the orders are there, but that is absolutely not a guarantee that we're going down to the 47.5 region. The way we know that is simply by following price action. And so what would happen with price action is we would get this lower high, we'll drop through this liquidity first, and we won't bounce from there. We'll get another lower high from there. That's when we will set up to say, okay, we're coming down for this next. So that's going to take a lot of time, potentially the whole rest of the month, although you never know, because I did think that this drop through here would take the whole of August, and it actually happened right at the beginning of August. So you never know. The thing about trading is you can't actually time when the price is going to hit a certain level, but we know that it's there, and we just have to follow price action day by day to see if they actually want to come for it. In opposition of that, we do have really large liquidity above price between about 65 to about 73,200, which essentially is just the top of the range. And look, they're going to come for that eventually, but whilst the market structure is not showing us that they're coming for it yet, we should remain very, very cautious. But in order for us to change our bias on this, we need to see the change in market structure, which we don't have yet. We have this double top here, a lower high here, a lower high here, lower low here, lower low here. We have bearish market structure on the daily time frame, and we have liquidity below. So we overall have a bearish bias until price can start to change the market structure, which it hasn't yet. Now, when we go down to the 1 hour time frame and we just have a look at our weekly setup, on my last update, I mentioned to you that when we have a whole week that is in one direction, meaning the week prior to last week, we had pretty much an uptrend for the whole week. Usually the following week will be a whole week trending the other way. So that's what's happened here. So when you understand the model that we trade on this channel, it starts like this. You have the weekend trap, you have a reversal formation, which is usually a W formation, and then we go into 3 levels of rises, and around midweek you get a reversal, which is an M formation, and then we expect 3 levels of drop. And so this is simply the one formation that we trade. The drop takes you back into the weekend trap, the consolidation. So this usually plays out over a 1 week period. This will happen sometime Sunday, Monday. This will happen usually around Thursday, and it's usually tied in with a news event. But if it was going to be the same all the time, then everybody would figure it out. And so the market makers play tricks on us to keep us guessing. And so when you take that same model and we have a look what has happened over the last 2 weeks, what we ended up having was our spikes to the upside took the entire week. This was a reversal formation here where we have the spikes to the high that were trapping longs at the worst point possible. Once enough longs were trapped, we then spent the whole week coming down. So we're basically at a reset now. And what is critical for us to assess over the next couple of days or so is what happens at this level right here. Now, this level is called the low of the week. It is at 57,123 when you're looking at the Bitcoin perpetual contract chart on Binance, but it will be similar no matter what chart you're using. I don't personally trade on Binance, but I do all of my charting on Binance because when I'm looking at liquidation levels and whatnot, that data is all pulled from Binance. But my preferred exchanges, I mostly trade on Bitfinex and BingX. And so if you are looking for somewhere to trade, I highly recommend you check out one of those exchanges. With BingX, for example, they have spot trading. They also have derivatives, and they have now got the CoinM. And so CoinM, in case you don't know, that is where you get to use your Bitcoin as collateral for your trade. And when you take your profit in that trade, the profit is given to you in Bitcoin. So in a bull market, coin futures contracts are amazing because you want to be accumulating the volatile assets. You don't want to be accumulating a stable coin. So highly recommended to check out BingX for that reason alone, but they also have earn features and everything like that. And if you do use the link in the description of this video, not only will you get a 25% trading fee rebate on all of your futures trades for life, but that link will also get you access to the free part of our Discord, where you can follow along with some of our written trade updates. For full directions on how to do all of that, check out the description below this video. So if we're to believe that any sort of short-term bounce is going to happen today at all, it is critical that we hold the low of the week level at about the 57,120 kind of mark. So far in the Asia session, we have done that. So we've had this little bit of a bounce here. However, the dead gap zone did give us this move to the downside. And what could be happening right now is that this is a retracement to create the initial high of the day. And UK actually continues the trend to the downside. The 15-minute time frame is going to allow us to be able to dissect a little bit more clearly what has been happening today. And I know you're probably not going to like what I'm about to say, but if you happen to catch my video that I did teaching you how to trade Asia into UK setups, I did it last week on this channel. One thing I said in that video is it is a day off trading if Asia trends. So when we have a look at this, the initial low of the day in Asia was put in early on in the session, and we closed this session with the initial high of the day towards the end of the session. In between that, we don't have any other touches. So this entire price action today for Asia was actually a trend to the upside, and that's not what you want to see because that is a signal of non-typical session behavior. Asia's job is not to trend. That's actually UK's job. And so when Asia does something unexpected, if you're still learning how to day trade, when Asia trends, it's a signal to take the day off. If you're a little bit more advanced, you absolutely can trade that day. But for beginners, this is a signal to take the day off because the market makers are switching the sessions around and it can be unpredictable. So what may happen today is, considering Asia has run a trend, UK potentially could consolidate. It might take over Asia's job, and then US might drop price further, or it might give us that breakout. But we want to try and get an understanding of why this is happening. And so we'll look to see if there are any news events. And I can see there that the US is a bank holiday today. So actually I changed my mind on that. The UK may bring the volatility because the US has a bank holiday and they won't be trading today. So it's possible the US consolidates and UK actually brings the volatility. If this is the spike high that has come towards the end of Asia, I would be looking out to see if that ends up forming the first side of an M formation. And throughout, somewhere in the beginning of UK session, you get the second side. If we do, then I would say we're going to come down to at least test the low of the week again. If we break the low of the week, then that's not really going to be good news, but also it means that price is going to create